Hi, Michael Glennon from Glennon Capital. Today I want to talk about something that's been a common theme through our portfolios for quite a long period of time and something that's been very beneficial to the portfolio returns. And that's the owner-operator. So I know we're investing in businesses that are listed, but one thing that we like as a characteristic of companies that we invest with is to have a CEO who has a very big stake in the business, so a lot of skin in the game. And the reason we like that is when we look back over time, we've seen that these people are very passionate, they make the right decisions for their own equity, which means they're making the right decisions for the rest of the shareholders' equity. So, on the odd occasion, there's CEOs that treat the company like a private business, and that can be good and bad. But when they're looking after their own investment, it's a large portion of their wealth. Quite often, they make the right decisions. Now, often we see shareholders complaining about the decisions that management's made, but when that management's got a large stake in the business, it might be their largest asset, quite often we see them making very strategic long-term decisions about the business that don't always deliver short-term returns for investors. So when we've made multiples of our money, 2, 3, 4, up to 10 times our initial investment, that's happened over a very long period of time. There may be a year or two where a CEO of a business hasn't generated any returns in share price for shareholders, but what they've done is laid the foundations for the business to be more successful in the longer term. And that's a capital allocation decision about reinvesting in the business or getting short-term returns for shareholders. So several years ago, there was a study about public company directors of the top 100 companies and the decisions that they made and the long-term implications of those decisions. And it found quite often that some of those executives made decisions that really benefited themselves and their own short-term incentive plans, whereas that key owner-operator that's running a small public business, that person will make decisions that are beneficial for their equity and the rest of shareholders' equity over a very long period of time. So it's something to be careful of. Some people are cautious of that situation. It's something that we look for, making sure you've got the right person who's very passionate and engaged with their shareholder base, and more importantly, is making long-term decisions that will benefit the business, not in the next 6 to 12 months, but over the next 5 or 10 years, and make the company far bigger and hopefully have that multiple return 2, 3, 4 times the initial capital was put in. So one of the things we look for, it's an important characteristic, something that we like and something that we've done very well for, something that you can look for in companies when you're investing. So nice characteristic. Thanks for watching. If you want to see more, look at our YouTube channel, Facebook page, or other social media channels.